So in this class, we're going to be talking about algo structure. What we're going to be talking about is the types of setups is type 1, type 2, type 3, which I'm going to draw out and also show on the chart. PY, where is it coming from? The bias of the market, whether it's bullish or whether the market is bearish. Protected high and protected low liquidity. So I'm going to break down everything. This is all we're going to talk about inside this class. We're going to break down everything. So let's start from type 1, what it looks like. Type 1 looks like this. Let's say this is a bullish scenario. This is exactly what we're looking for inside the market. This, so this is going to be considered my sweep. First of all, look for a sweep. Then after a sweep, we want market to take out the previous structure. Then pause and create another sweep. Taking out the high again. Taking out this high again. Then this would be our entry. Our entry would be here. So we're going to use a order block. There's going to be an order block over here, either from here or from here as an order block. There's going to be an order block over here. An order block is basically, let's say in the bullish scenario, let me show you another block. In a bullish scenario, another block is, okay, bullish, is the last down candle before the bullish candle move. So this is a last down candle, the last bearish candle before the bullish candle. That's what is considered an order block in a bullish scenario. And a bearish scenario, another block is called is the last is a last bullish candle before the bearish move. That's what another block is. So back to what I was saying. Yeah. So we'll use the other block. That's going to be considered our PY. This box that we're drawing out is considered our PY. So you say I kept PY, and this is type 1 we're currently talking about right now. Type 1, the type 1 setup. So this is considered our protected low. Why this is called protected low is because we do not expect price to take out this level. And this is the level our stop loss is going to be placed. That we do not expect price to take out this level. So immediately after market creates liquidity, we draw out either our POI, which means point of interest, where we're interested in to buy at. Then we set our limits. I usually set my limit at the liquidity line, but you can choose to set your limit at the order block, at the start of the order block. Choose to set your limit here. Then you target the overall high. This is what type 1 looks like. In a bearish scenario, type 1 looks like this. First is sweep, then it creates liquidity. So first of all, we get a sweep in price. Price sweeps this high, then it creates liquidity at this point. This is going to be our protected high. That means we do not expect price to take out this level. We do not expect price to take out this level. And that's where our stop loss is going to be placed for a sell. This is a bearish scenario. If we're looking for sells, you put your SL above this protected high, then drag it out all the way. So you set your limits and wait for price to get here. Then price takes out this low. So this is type 1 for a bullish scenario. For a bullish scenario, and this is type 1 for a bearish scenario. Or this. So on to type 2. Type 2 looks like this. Markets. This is for a bullish scenario now. Market takes out this low. Then before taking out this high, market creates a structure, a substructure before taking out this high. The market retraces to take out the overall target. So this substructure would be considered our liquidity. This substructure will be considered our liquidity. This is our sweep. Market sweeps this low, then creates a substructure. This will form as our liquidity. Comes up here, then we draw out our point of interest, which is our order block. This is going to be our protected low, where we expect price not to take. We expect price not to take out this low. Then we set our limit either at the liquidity or at our point of interest. Put your SL below this level, then drag it out for the overall target. Then for a bullish scenario, for a bearish scenario, sorry, this bullish scenario, for a bearish scenario, it looks like this. Takes out this high, then before taking out the overall low, it creates a substructure, then comes up to take out the overall target. Draw out our order block or QMR. This is going to be our order block, or this can be our order block. Draw it out. This is going to be our protected high. Liquidity created, which is our substructure, is our liquidity, where we expect price to take out. But this place is meant to be protected, so price is not expected to take out this level. Our sweep, then we set our limits either at our PY or at the liquidity point, because we know that price is always meant to reach the liquidity point for our move to start. Then overall target. So this is for a bearish scenario, this is for a bullish scenario. So now to talk about type 3. So I've spoken about type 1, type 2, I've spoken about PY, I've spoken about liquidity, and I've spoken about protected high and low. This is a protected high, this is a protected low. That we expect that price is not expected to take out this low. So now to type 3. Type 3 goes like this. For a bullish scenario, first of all, we get this sweep, then we see this market does not take out the overall high. This high does not take out the previous structure, but it's close to it. It has to be close to the liquidity, forming a double top that takes out the overall target. So market does not take out this level, but it has to be close to it, forming a double top. This is going to be our liquidity, where we expect market to retrace to. Our other block be here, then our protected low, then our overall target would be here. We expect market to take out this overall high. So this is our type 3 setup. For a bullish scenario, this is our type 3 setup. Our protected low, our POI, our liquidity, our sweep, making markets takes out this low. This is our sweep right here. It didn't take out this high. That is why it's considered a type 3. It didn't take out this high, but it was close to it. So it forms a double top, which it forms at our liquidity. Then market retraces to the substructural liquidity. Substructural liquidity has to be formed before reaching here. Substructural liquidity then retraces to come and take out this high. This is our type 3 in a bullish scenario. Then in a bearish scenario, looks like protected high, our POI, our liquidity, our sweep, which was this level being taken out, our sweep. Then we expect market to take out the overall target, which is this level. We expect market to take out this high, this low. That's our overall target for the bearish scenario. So this is a type 3 for a bearish scenario in a selling market, and this is type 3 in a buying market. So this setup does not work on its own. It has to work with alignment with the higher time frame, the bias of the markets, and where the market is heading to. That's to align. Everything has to align with each other. So I'm also going to talk about where it's coming from. That I'll have to show on the chart. So let me remove all this and we'll go straight to the chart. I marked out something so I don't have to be looking for it because it takes time for to actually find the setups. So since I'm trading on the higher time frame, so it takes a while for the setups to form. So where it's coming from? Remember, in where it's coming from for 4 hour time frame, you can get an order block. Where it's coming from, basically like you getting an order block from a higher time frame, either the 4 hour time frame, the daily time frame, or the weekly time frame to support your setup. Meaning that an order block is pushing your setup towards the direction it's heading to, whether from the 4 hour time frame, the daily time frame, or the weekly time frame. So for 1 hour setups, let's say you find you have your setup on the 1 hour time frame. You really want to be looking for other blocks on the 4 hour time frame. You really want to look for other blocks on the 4 hour time frame, 4 hour, daily, 1 day, and 1 week time frame for 4 hours for 1 hour setups. And for 4 hour setups, what I mean by 1 hour and 4 hour setups, meaning that your setup is showing clearly on the 1 hour time frame, and 4 hour setups, meaning that your setup is showing clearly on the 4 hour time frame. So what can support it? Like where is it coming from? What can support it is the daily time frame and the weekly time frame. Daily and the weekly time frame. So that means your setup is clear and very visible on the 4 hour time frame. You can only support it on the daily and weekly time frame. But on the 1 hour time frame, where your setup is visible, you can support it from the 4 hour time frame to the daily time frame to the weekly time frame. So you can find an order block that supports your setup. So let me even draw the setup first. So the setup I'm saying is, first of all, there's a sweep here, a sweep right here. You see this, another sweep. What the market do? Markets retraced and came down here. Then we see another sweep here. We see liquidity. We see a sweep here. Let me remove this to even make it more visible for you. We see a sweep here. We see a liquidity form here. This is going to be our protected. It's going to be our protected high, and our overall target is here, where market ended before retracing to the upside. So on the 1 hour time frame, we already have our setup. This is a type 2 setup. Let me draw it out. Type 2 takes out, comes here, goes here, then one next comes here, and takes out this low. Same thing that happened there. Comes here, comes down, and takes out the low. So we have our setup visible over here. You can draw your order block. Either you want to use order block to enter, but me, I prefer to use liquidity because I do not like to miss out. I'm a person that don't like to miss out, and I know that at the end of the day, my RR will compound, even if I'm getting lesser RR. But I do not take less than 2 RR. That means risk to reward. I think everyone should know that by now at this point. Everyone should know that. If you're watching my videos, you should know that. So you can use the order block. This is the order block. The last bullish candle before the bearish move. So we draw it out. Then we put our SL above the protected high, then draw it to the end. So this is a 3 hour trade, 3.1 hour trade. But for me, I usually enter the liquidity points. So I'll get 2.3 hour. That means if I'm risking $1,000, I'll be getting $2,300. If I'm for a 3 hour trade, if I'm risking $1,000, I'll be getting $3,000 extra as profits. So trading is a RR game and also a win rate game. So everything you have to account for losses. You're going to take losses, obviously, because you're going to make mistakes. And there's also going to be things that you can't control, like news or geopolitical war or anything that can happen. You can't control that. So you need to be able to get ready for that. So the point of the hour is that everything is going to compound at the end of the day. Even if you're to take losses, your wins will bring you back and still make you profitable. Will still bring you back in profit and still make you profitable. So that's the point of the RR. To break down the RR, I think that has to be another video where I'll break down how RR works. So this is the setup. This is the type 2 setup. And where is it coming from? You can use either the 4-hour time frame. What do we see is that markets broke this low. So the fact that market has broken this low, this is our, where is it coming from? Right here. This is what is supporting that move on the 1-hour time frame. So we have where it's coming from. We have where it's coming from on the 4-hour time frame, supporting our 1-hour setup. Where it's coming from on the 4-hour time frame. You also need to know that market needs to break a structure before you can consider that another block. Market needs to break a structure before you can consider it another block. So let's say in a bearish scenario, the large bullish candle before the bearish move, you drag it out. So that's going to be where it's coming from. Just like the other block over here, where it broke this level. So this is considered our last bullish candle before the bearish move. Where it's coming from, same logic, but it has to be higher time frame supporting your setup. So for the 1-hour time frame, you can have it on the daily or weekly. You just have to find an order block that actually supports your setup. On the daily time frame, what do we see? This from the start of this is the start of my order block on the daily time frame. The fact that it has broken this low, this is considered an order block, the last bullish candle before the bearish move. So from the beginning of this bullish candle to the high, that is my order block. So everything happening here, and you also know that the market is bearish, continue creating lower lows, like that. So we follow the trend. We have where it's coming from on the daily time frame. Then we have our setup on the 1-hour time frame. We have our setup on the 1-hour time frame. So the daily time frame is supporting this move to the downside. So it respected our other block, which is where it's coming from. Our bias is bearish. Since the daily time frame is bearish, we have our liquidity and we have our sweep. So what next? We set our limits, move on with our day. Market comes in, goes straight to TP. Another scenario is this right here. USD chief. Go to the time frame. What do we see? You see sweep. Okay, we see our sweep over here. We see our liquidity brought out from here to here, comes down. After coming down, it comes back up, stick out this low. So this is a type 1 setup because it takes out this low, comes down, then retraces to create another structure, comes down again to take out this low, then retraces to our liquidity. We set our limits at the liquidity, or we can use the week of this last bullish candle before the bearish move. You can use the week. but it has to be above the liquidity because we know that price has to take out this liquidity for our setup to start. So you can use the wick of that bullish candle, then to the end of the structure. This is a 5.8 hour, meaning if you risk $1,000 or if you risk $100, you get $580 profits. Where is it coming from? Do we have anything where it's coming from to support our move? And yeah, right here, the last bullish candle, which is right here on the 4 hour time frame, push. Why that is valid is because this high was taken out, this low was taken out. So this is a structure supporting our move for a down push. So this is a type 1 setup. Moving on to S&P 500. You should also know that this my strategy, algo structure, I do not use it alone. You can choose to use it alone, but you won't get as much profitability compared to what I'm doing. I joined it with the concept that I figured out that I saw happening regularly inside the market, which I have taught inside advanced structure. So if you watch the advanced structure video, you try to put two and two together, you'll figure it out. You definitely, I've taught everything you need to know. I have taught it. So this is my sweep, my liquidity, and other block. This is the last bearish candle before the bullish move. But we can see that this is higher than our liquidity, so we can't use this. We use QMR. QMR basically is the the bearish candle in the previous structure before the sweep. So this is my QMR. You can use this. If this is not available, you can use this, or you can use the wick of this. You can use the wick. But what me I would have done is, because I do not like to miss out my trades, is I use the liquidity sweep to catch the first move. So this is a type 1 setup. Draw it out, sweep, takes out this high, retraces, then creates another structure. So this is my type. This is my type 1 setup. So I'd have kept my entry over there because I do not like to miss out. Then kept my TP over here. So this is a 2.63 hour trade. What was market currently doing on the daily, weekly time frame? What was it doing before that setup? S&P 500 was continuing by it was buying. It continued making higher highs and higher lows, buying continuously. What do we see? We see higher highs, higher lows. The overall trend was bullish. So I went with my bullish bias. If you, if you, after watching this, watch advanced structure very well, and I want you to go back to all these setups that I have shown. I'm not going to specify what I did here. I want you to identify it on your own chart and see why all these setups were very good setups. So go back on your own chart. check them out. This is 8th of January. Check all of them out. What did I do? What did I add with that advanced structure to this algo structure to enter all my trades? Go to Euro NZD. What happened is on the 4 hour time frame, we see sweep, liquidity. Is there another block available? No, no other block available. So we can use the week, can use this week, or you can go down to the lower time frame to find that block. So the last bearish candle before the move is this. I use this, they can use this right here. Last bearish candle before the move is this. Then this is a type 2 setup, came down and took out this out. My entry would be here. Entry will be here, but profit will be over here. 3.35 hour. So I've spoken about type 1, type 2. There is a type 3 setup right here. Remember, everything has to align with each other. Bias is very important. Learn advanced structure and you understand bias to a large extent. Learn and master advanced structure. There's still more to it. I might not actually explain it. But the fact, what I've said there, it has covered a lot. It has definitely covered a lot. So learn advanced structure and you'll figure out bias. Trust me. This is a type 3 setup. Why is type 3 is because this high was not taken out. So let me draw it out. See, this everything here is substructure inside the main swing structure. From here to here. Then what happened is this market came down and took out this high. So my other block could have been here. This did it reach 2R? This question. No, it didn't reach 2R. But since okay, did it reach 2R? No, it didn't reach 2R. Since it didn't reach 2R, I would have moved my entry a bit lower to make sure I get 2R. So I'll set my limit for price to move down towards this point. So this is where price will tag me in, and I'll get 2R at least. I have to get at least 2R. So this is a type 3 setup because it didn't take out this high. That is why it's type 3. It formed double top. So this double top got taken out at the end of the day. My liquidity, my sweep, my order block, and oh, the ADSD, sweep, liquidity, order block right here. So this is a 2.7 hour. This is a type 2 setup. You see that this setup is appearing multiple times inside the market, any pair, anything you're trading, it's happening consistently inside the market. You just have to be on the right direction of the market. So make sure you don't get stopped out. So understand buyers. Very, very important. Understand buyers of the market and you do wonders. 4, 4 hours to find order block, whether on the 4 hour, daily, or weekly. Do we see any? Where's it coming from? Do we see anything? Support this move. Nope. Weekly. Nope. Right here. Right here. So this is our order block to support this move on the 1 hour time frame. Our 4 order block to support the move on the 1 hour time frame. Right here. Right here. 4 order block to support this move for the bullish push. Then EU50. It's another indices. What do I see? Set up at so just late February. It's February. Okay, this is right here. Right here. So we see liquidity. We see the sweep of the previous structure. Then what we see in the market is this sweep goes up, comes here, down, then comes back to this liquidity and takes out the overall target. Watch advanced structure and come back to all these setups and see why I choose to go bullish on some of the trades, to go bearish on some of the trades. Watch advanced structure and see the reason why. Advanced structure basically covers everything about bias of the market. Watch it. So my entry was over here. OSL, then our targets. Yeah, 6.72 hour. So yes, that's that's all I'm going to talk about. This is a type 1 setup. So that's all I'm going to be talking about on algo structure. So I've spoken about type 1, type 2, type 3. We've spoken about PY, which is basically an order block. We've spoken about where is it coming from, which is a move on the a order block on the higher time frame, supporting our setup on the lower time frame. I've also spoken about protected low, which is where we expect price not to take out, which is this low right here, protected low. If it's a bearish case, protected high. If it's a bearish setup you're looking at, the high is going to be called protected high, which we expect price not to take it out. And we've also spoken about what's spoken about. Yeah, so basically covered everything. Everything on algo structure, we have covered it. So it's just left for you to actually practice it. Check it multiple times on the charts. Verify. check why did this setup work out? Why did this setup not work out? Look at the direction of the market, learn advanced structure, and compile everything together. So that will be all for our restructure. Thank you.